is, apart from it being the biggest asset class, if you look on the right side of the screen, you see that the outstanding mortgage debt, which is what everybody focuses on, is the debt and the delinquencies and so on, is 2.3 trillion. So what this very clearly shows you is that a lot of Australians have either a very small mortgage, or they have paid off their mortgage. Particularly my age group, who are called the baby boomers, they've paid off their mortgage. Okay, so the high interest rates don't impact everybody, and we'll talk more about that later. Okay, but the important thing is, if you're in Australia and you're not investing in residential real estate, then you need to think again. If you want to create wealth, you've got to be in this space. And there's a number of good reasons why you've got to be in this space. History has it that prices keep going up, and there is no reason why prices won't keep going up in the Australian property market. So what really moves the needle when it comes to property prices? And I've got my top 7 here in some sort of order. The very first thing, like every other commodity, is supply and demand. So everybody predicted that with rates going up, property prices are going to come down. Okay, that's what you heard for the last 2 years. However, it's defied all of those predictions because of this one factor: supply and demand. Supply and demand for any commodity has to be number one. Okay, low supply, high demand, prices are going to go up. Very simple formula. Interest rates and affordability is, of course, very important. And I've been using these slides, actually. This slide has been there for quite a number of years, with slight tweaks here and there, but mostly it's the same. Inflation and wages growth are the things that actually determine what happens with interest rates. So we need to very closely see what happens with inflation. Okay, it's we all are very closely watching inflation now. So everyone understands it a lot better than what they used to. The third one there is regulation. APRA and RBA are the key regulators for banks. And the bank's lending policy and risk appetite in lending to this asset class, residential mortgages, is absolutely key. If the bank stops lending to this asset class, guess what's going to happen? Property prices are going to plummet. So it's very important. And we've seen with interest rates rising, people's ability to borrow is obviously going to come off with interest rates, so their appetite goes down, and so you see some correction, which is inevitable. But a healthy banking sector that we have, their main asset class, if in any bank you look in Australia, let's say the big 4, half of their assets are actually residential mortgages. Okay, half of their assets. There is no place in the world where you would see a bank's balance sheet and half of their mortgages are actually in residential real estate. Nowhere. Only in Australia. Okay? So that is a phenomenon that is true for Australia. Why? Because we love real estate and everybody buys real estate. Okay? The fourth one there, and APRA, I should say, is APRA and RBA have a number of levers to pull to actually tighten the market and slow things down. So at the big tightening factor at the moment that APRA are using is they're using a 3% buffer for working out your ability to repay your loan. Why 3%? Because rates were rising and they wanted to make sure that there is a low amount of delinquency, so people can still afford the loan as rates rise by 3%. Okay. Now that rates are probably the next move, we'll talk more about interest rates shortly, but the next move is likely going to be down. So if the next move is going to be down, why should APRA maintain the 3% buffer? Why shouldn't they reduce it, maybe down to 2%? Well, they came out 2 weeks ago and said, no, right now we're maintaining it. Okay, but that could change. That could change. So it's a double whammy gain if you see rates coming off and APRA eases that. Then from a mortgage lenders who might be listening today, they're going to find that appetite goes up quickly. The same way as appetite came down when the buffer went up. Economy, we need to make sure the economy is in check. These two things are very, very important, and RBA will look at it very closely. The GDP the growth in the economy and unemployment. Okay, we're stuck at the unemployment thing at the moment. We'll talk more about that in a minute. Government spending, infrastructure, incentives. Again, very, very important. One of the things that's keeping GDP up at the moment is government spending. Okay. Now, government has done an excellent job post-COVID to make sure that our GDP growth remains positive. But is it positive? I'll let you know shortly. Sixth one there is very important. We don't talk much about it, but every once in a while you talk about delinquencies in the bank's loans. So if the half of the assets of a bank, let's say CBA, almost $1 trillion in assets, half of it I said is in residential mortgages, that's $500 billion, okay, in one bank. So how are they going with their loan write-offs? If you don't pay your loan for 1 month, you get a letter from the bank and a few calls and a few SMS messages. You don't pay a bank loan, you loan residential mortgage for 2 months, you get a few more nasty letters. 3 months, and you are on what's called the worry list for the bank. And they will start knocking on your doors. They start making noises about, we got to do a mortgage in possession sale. Okay? And that's the last thing we want. That's the last thing any Australian wants. And we are extremely good at it. Okay, we are extremely good as a nation to pay our residential mortgages and even our investment loans. The delinquencies at banks on residential mortgages is minuscule. Okay, it is lower now than pre-COVID levels. So if anybody tells you there's going to be lots of mortgage in possession sales because people can't pay their loans off and banks taking, absolutely not. Absolutely not. How many mortgage in possession sales have you guys seen recently? I'm sure not many. And property prices go down because of this when you've got no buyers. So if there's a mortgage in possession sale, I assure you there'll be 50 people at the auction, and the prices will be at market rates. Maybe you'll get a small discount, depending on the property and where it is. Last but not least is global factors. Now we've got Trump back again. Yes, there's potential, not so much trade wars anymore, but you know, you've talked. You see the tariffs are already noises made about tariffs going up, particularly in the big trading partners for the US. And all of these factors have some play. They have some play in our market. Okay, they're not major. None of these things are major. That's why they're number 7. But they all together can have a play. Foreign exchange rates, for example. So the lower our dollar, the more, the easier it is for people to come and buy here from other markets, whether they're from US or whether they're from Hong Kong, Singapore, India, etc. So those things become important. Equity markets are important because as equity markets fall, people's pockets, hip pockets get hit. And so they don't have the buying power anymore. They feel poorer for it. So these are the smaller factors, but supply and demand, these ones, the first 4 or 5 there, extremely important. Okay, talk more about that. Quick recap on the key data here. So Reserve Bank has stayed steadfast for a long time now at 4.35. What's next? US Fed, they've been decreasing. So this was at 5.25. It's coming off. Okay. What they're going to do next week is a good question, because if they go down again next week, which is highly likely, I think, the only thing that's holding it up is probably they're thinking about, well, is Trump's policies when it comes in going to be more inflationary, and therefore we should hold back and see what happens to the economy. But all of the indications are that they will cut again next week. US inflation still fairly controlled. It's in the right place. Our inflation is still high. Okay, then that's the key reason why the RBA is not moving. Our last month number was really low, 2.1%. Okay, that's for the month, and that's not the right indicator. So the Reserve Bank governor keeps saying it's the trimmed mean, and I won't try to explain that here in the interest of time. But the trimmed mean is the figure they're looking for re-inflation. And that needs to be within the 2 to 3% rate. Recessionary fears, well, US probably nothing to talk about in terms of inflation anymore. It's not. We've got to keep watching these big economies, UK, Europe, but China is probably more closer to home for us in terms of just making sure that their economy is going well, because if their economy is not going well, and we are one of the net exporters to China, there are very few countries in this world, I should say, very few countries in this world who are a net exporter to China. Okay, there are only about 3 or 4. Most people import more from China than they export. We are one of those countries, including Brazil and Canada, who actually export more to China than actually import. So slowdown in China does impact us. On the positive side, so this is negatives, this is positives. When I say positives, they're all bad news for properties. So rental crisis, we've got shortage of housing, we've got, well, this is good news actually, but it's not good for interest rates coming down. But the employment is healthy. It's too healthy for the RBA to bring it down at the moment. We've got a lot of people, 400,000 people coming in 2024. Okay, that's a big number, and it doesn't look like it's going to come down. A lot of people ask me, why can't we turn the tap off on migrants? And there's 2 good reasons I can give you. One is that we need skilled migrants right now. There's about 90,000 shortage just in the aged care sector. Then there's the building sector. We need homes. We need builders. We need skilled people to come and build homes. It's a catch-22, right? We need homes, but we need those people to come here to actually build the homes. And then, of course, you've got a lot of foreign students and others. So there's huge labor shortages. And the second reason I should tell you is that we have an aging population. If you didn't know, we have an aging population, and we have a very large number going on to the pension every year. So for the next 10 years, the number is like between 3 and 4 million people more are going to go on the pension. How are we going to pay for them? Migrants who come in here, they work, they pay taxes, and that funds the retirees. There are 2 good reasons why we can't turn the tap off on migrants. Last but not least there, and you saw the numbers come out a couple of days ago, GDP 0.3% in the September quarter, not good news, okay? Per capita GDP is negative, and we'll talk more about that. So what's making news at the moment? What's the headlines? This is what's making headlines in the last week. Australia's house values tumble as economies struggles. Second one, the downturn is gathering momentum in Melbourne and Sydney. Tim Lawless, CoreLogic's research director, who a lot of people listen to, okay? But in my personal view, Tim Lawless most of the time is clueless. September, October, we fell 0.2%. So Sydney's property price has fallen in the last quarter, last 3 months, it's fallen 0.5%. And the so-called journalists are calling that tumble. I don't think tumble should be associated with the house values in 1 quarter falling by 0.5%. I think it's a joke.
Good morning.
The journalists need to be held accountable for this.
देखो कितनी चल रही है.
So please,
Are you jealous?
please keep yourself on mute. Now, sorry about that. Sorry, and then last one here on this page is the unemployment rate is at historical low at 4.1. We're creating jobs. Now, I said we're getting so many people coming into the country, but the unemployment figure is not going up. So people are coming here, they're finding jobs, there's plenty of jobs, and we're stuck with an unemployment figure. So that's making headlines, and that's not good news, because they obviously want to see that figure actually going up. We're hoping that the figure would go up to about 4.5% by now. What else is making news? Australia's economy is growing at the slowest pace in decades, propped up by government spending mostly. Okay, we'll talk more about that in a minute. But that's big news. Okay, it's not good news at all. And I was actually hoping that we have a GDP negative quarter, but we've still got a positive quarter. This figure would not be positive if it wasn't for government spending. What property prices are forecast to do in 2025? Well, the domain is saying house prices are tipped to rise as much as 6% in the next year if rates are cut. Okay. Then we've got suburbs where apartment price growth is blitzing houses. So this came in on 24th of November. Apartment prices, AFR, are rising at a faster rate than house prices in almost 2/3 of all suburbs nationwide. Okay, that's fueled by demand from buyers locked out of the freestanding house market, data from CoreLogic shows. Where price growth for apartments will outpace houses, and this is again from Neela Sweeney from IFR, apartment values will increase at a faster rate than houses in Brisbane next year, fueled by surging demand, etc., etc. Domain predicts. And in Sydney and Perth, prices in apartments are expected to match those of houses. So there's all this news coming. What do we make of all of this news? So this is the noise I'm talking about, right? So you got all this news. Some are conflicting news. One party is saying, CoreLogic is saying, that's the end of it. You know, prices peaked in August. The latest report came out last week, says prices have peaked in August, and from here it's going to tumble. Okay, tumble. So they like making headlines, but we'll talk more about this after looking at the numbers. So the home value index, this is what they're talking about, the annual change in the home value index. Sydney's the last 12 months went up 3.3%. Melbourne's down. Melbourne's been down all year. Brisbane's not bad, pretty good, strong performance, double digit. Adelaide, Perth's the winner, obviously. Perth's going gangbusters. And then you got Hobart, Darwin. Nobody talks about those anymore. And then these are combined capital numbers and national number. So nationally, we are growing at 5.5, but that's been really helped by these three, okay? Really, that number would be negative if it wasn't for these three. These three have really helped that number, big time. So where to from here? So cash rates. In the last 30 plus years, okay, going back to January 90, this graph is really important because I get a lot of debate about what a high interest rate looks like. And like I said, I've been around for 42 years. Yes, cash rate was at 17%. Yes, I paid 17.5% interest for my first mortgage. It is true. We had an interest rate more tightening over here, one here, another one here, 2, 3, 4, and the fifth one on a blown up graph here is this one here, okay? Very sharp. We've had 5 interest rate tightening cycles since January 1990, okay? Now, I'll hasten to add that in none of those interest rate tightening cycles did house prices actually fall. They fell, they had a small correction. I don't call that a fall. So I think you all need to know that if you haven't been in Australia for that long, and you've only come here in the last 10 years and you've become a property expert, a high interest rate is not 4.35. The average since 1990 is 5%. The cash rate, 5%. That's the average since 1990. So we're not in a high interest rate environment. Don't kid yourself. What's happened is the RBA wants it to be here. This is the blue line. This is nirvana. This is where they want to see the cash rate. This is where they want to see inflation, okay, between 2 and 3. It's stubbornly still above, okay, but it's not too far off. It's not too far off. Now, what are the big 4 banks thinking? When the first cut is going to be? This keeps changing every month, by the way. So don't hold your breath because it might change again tomorrow. And how many cuts are they forecasting on the right side next year? CBA is the most bullish. They think February 25. And the other 3 have changed in the last couple of months. They've changed their forecast. And now they're all going for May. Okay? Number of cuts forecasted. ANZ is the least bullish. They're very bearish. Only 2. And NAB thinks we're going to get 5 cuts. Okay? Let's say it's going to be somewhere between February and May. I'm going to stick with February. I've said February for the last 6 months. I'm going to stick with February. For now, I'm going to stick with February. You might say I'm very bullish. But the reason why I'm sticking with it and not changing it is because of the GDP number. Okay? We'll talk more about that in a minute. And now at the bottom here, you got fixed rate commentary and prediction. I want all my listeners today to understand that fixed rates of interest for mortgages are not set by the Reserve Bank. Reserve Bank has nothing to do with fixed rates. Fixed rates are forward-looking, and they are set by three things. They are set by bank bill futures, which is on the Australian futures market, number one. Number two, the bonds that go out to 5 years and 10 years. And number three, there's a derivative called interest rate swaps. These are the three things that actually determine how a fixed rate is actually set. What you do is you draw a yield curve, and then you work out the actual fixed rates based on that yield curve. Well, it's forward-looking. Unlike cash, it's forward-looking. The moment we have a fall in interest rate, so let's say it's February or May, the moment you have that 0.25% fall in the cash rate, all the mortgages will be dropped by 0.25%. But guess what will happen to fixed rate? I get asked almost every week by somebody, should I fix my rate now? It's gone to 5. It's got a 5 in front of it. It's 5.8 now. I can get 5.9. Any mortgage brokers listening today would know. So can I fix my rate now? And answer is very clearly, do not fix your rate now. Absolutely not. Okay? Reason for it, the first 0.25% fall you're going to have almost 0.75% fall in the fixed rate. So if this happens in February, your fixed rates are going to come down to 5, around 5. Okay? And then if you got another second one in May, you got a 4 in front of it. So please bear the pain for another 4 to 6 months. And then you will thank me, because you'll be able to fix your rates at 4 something. And that's what's going to fuel the market. People are all focusing on the cash rate. What's going to fuel the market is actually the fixed rate. It was the 1.89 and the 1.99 fixed rates that actually fuel the housing market. Okay? Yes, the variable rate is actually what they use to work out your rates and the buffers, but fixed rates will have a big impact. Okay? So the Australia GDP growth, listen, this shaded part here, the reason why I've shaded this part here is this is pathetic. Okay, our economic growth here is pathetic. There's nothing to write home about. And most of this is fueled by two things. It's fueled by consumption from migrants, and it's been fueled by government spending. You take those two things out, this will be all negative. We will be in a recession. Right? So our economy only rose 0.3. Now the Reserve Bank governor needs to look at this very, very closely and make the right decision for our economy. Otherwise, there's going to be a lot more happening out there. But the saving grace for her at the moment is the government spending. And she come out saying, government, it's a good thing that the government is spending, otherwise we'd be in a recession. Why can't she take that equation out and say we are actually in a recession, so we need to do something about it? Then the other factor is our unemployment. So our GDP per capita, by the way, is minus 0.3. Now here's where inflation is, right? And these are some of the factors that we really need to watch. Price gouging insurance. So there's an inquiry going on the insurance. Everybody who's received their insurance premiums, it keeps going up, not by 5%, 10%. It goes up by 20, 25, 30%. Now you see here that inflation is still stubbornly high. Okay, it needs to come down. It needs to come down to somewhere around here. We're not far off. We are not far off. And then the other one is this one here. This is we need to lay off more people. We need to get more unemployment. It's a nasty thing for me to say, okay? Because have a look at this. August, September, October, 4.1. The needle is not even moving. So the RBA governor is thinking, okay, we have got so many people coming into the country, and we are almost at full employment. People still getting employed. So what's wrong with our economy? She wants to see this figure go up. She really wants to see. This is the one thing holding her back. Okay? Now, I can't fix that. And the inflation, obviously. The inflation and unemployment has to both Inflation has to come down, and unemployment has to go up. So the big story, like I said, is in my top 7, the big thing was supply demand. I'm going to talk a little bit about supply demand. Let's put all of the economic indicators and everything to the side for a minute, okay, for the next few slides. Let's put them all on the side and concentrate a little bit on supply and demand. So where is the demand actually coming from? Firstly, there is migrants. Net overseas migration has been huge. The numbers have been huge, okay? It's going to taper off a little bit, but still going to stay quite high. It's still going to be edging around the 300,000 mark the coming years. We've got a lot of overseas people coming here, but also we've got a lot of overseas buying happening here. Okay, this is a good place to buy properties. Yes, the Chinese buyers have been the big buyers of late. The Indian interest is coming in now. They are finding it that this is a good place to actually buy. That's something new. The Japanese have suddenly got a lot of interest here. There's billions of dollars of money coming from Japan. There is money coming from Europe as well. It's not just coming from individuals. It's also coming from, see, the interest rate that you earn in some of these countries, I think most of you are probably aware. In Japan, for example, if you put a fixed deposit for 1 year, you get 0.2%. I mean that, 0.2%. So those large institutions who have got significant amounts of money in the bank, where would they take the money to get at least a 5%, 10%, 8% return? That's why they're looking at us. Europe is exactly the same. Okay, so there's a lot of foreign interest in our property market that keeps the property market in check. Okay, there's a lot of migrants who are millionaires or very high net worth people. This is where they come from. Okay, they come from, the red ones are the big ones. This is where they're leaving the country. Russia, I can understand. China, India, and I think with Trump winning the elections, no disrespect to Trump, I'm not going to make any political statements today, but there's a lot of, you watch the Foreign Investment Review Board applications for purchasing properties in Australia from the US is going to spike up in the coming months. Definitely going to spike up. The beneficiaries of these are these countries. This is where they're buying. UAE, very, very strong market, particularly Dubai. Australia is a benefactor, Singapore is. So they're looking for safety havens, coming out of a country that's got some issues and going and spending their money somewhere else, whether they want to educate the kids and so on. Talking of education, international students in Australia create a lot of demand. Mostly that's rental demand. But sometimes for the wealthier parents who are coming from countries like China, India, they want to purchase a property here for their children. Okay, so that is happening as well. I'm sure you find it very surprising, some of you, that there are 609,000. This is a pretty big percentage of our population of international students in Australia. And this is where they come from. And this is where they go. Most of them are in Sydney, then Victoria, then Queensland. Okay, they create demand. So demand is coming from local population, from migrants, from non-resident community, etc. So what about supply? Are we able to keep up with this? The answer is obviously not, and that's why we've got this massive shortage of properties. Okay, so here's the demand, and here's the supply, and there's this big gap, which is not going to be solved overnight. I'm going to go quickly through these. So the key supply constraints are these. The cost of construction is a big deterrent for developers, mainly apartment developers. The cost of building a 2-bedroom apartment in Sydney is now over $400,000. Pre-COVID, just about 4 years ago, it was $250,000. Do you do your maths? It's gone up significantly. So first you need the land, then you got to build the apartment. And if the apartment is going to cost 400, you've got to be able to get a selling price where you are able to sell that apartment. Right? That's really important. The large delays in project completion because of the labor shortage. And some materials, but materials sorted now, labor issues are still there. There's essential services lacking to release new land, particularly water and sewage. So yes, there is a lot of land in the Northwest still. There is a lot of land in the Southwest, Austral, Leppington, Camden, and so on. But they can't develop it because the Sydney water cannot get the sewage and water supply quick enough. And that's a real issue. Then there's a lack of developable land. The Hawkesbury Shire is now significantly has been underwater in the last 2 floods. And so there is a lot less developable land left over there. It actually affects the Blacktown Council as well in places like North Marsden Park, Riverston. You've seen it all in the news. Those areas have been impacted greatly. So there's not much land left in the Northwest. I think we will run out of land in the Northwest in the next 6 to 7 years. And you know what happens to property prices when you have that? Fewer building companies in the market, and that's well understood by everybody. There's less people constructing homes because there's just fewer companies. A lot of them have, there's quite a few that have gone broke. Now, this is an important statistics. Dwellings approved is important. We've got to have dwellings approved first before you can actually build them, right? First, you need applications for dwellings to be approved. So this has been actually falling quite a bit since COVID. So you can see there's been a downturn. So your dwelling approvals in this period has been going down when the actual demand has been going up. What does that tell you? This is one of the big reasons why we've got a issue between supply and demand. Okay. Now we can see a bit of uptick here, which is very encouraging. This uptick is very encouraging. There's more dwelling approvals now. But first you've got to approve it. Second, you've got to build it. There's some apartment builders I know, and I consult for quite a few of them, that have got their approvals and they're not starting construction. They're concerned about something, okay? Concerned about the cost, particularly the cost. So that's important. Rental vacancies, as I said, we've got we're in a period where it's been 1%, went down to 0.9. It's ticked up a little bit now, but still we need a healthy rental vacancy rate is somewhere around 2.5 to 3%. That's healthy, okay? We went very high in some suburbs during COVID. That's well documented. I won't go there, but this is very low, and that's an issue for us. We need to solve that. If it stays there, rentals will continue to creep up. A few property market observations from me then. Housing supply will significantly lag demand, at least for the next 5 to 10 years. We are building about 27,000 homes in Sydney every year, okay? And that includes apartments, townhouses, and houses. We need 40 to 45,000. That's a huge gap. We're talking about a gap of more than 15 to 20,000 homes a year. That is a gap that the New South Wales government is throwing everything at it now to solve that issue. It can't be solved overnight because you're not turning the tap off on the demand side, and supply needs to catch up. That equation just doesn't get fixed overnight. So it's going to be a problem for the next at least 5 to 10 years. The rental crisis will keep worsening at the moment. I mean, for the same reasons. We've got a shortage. Increased cost of construction and the highest levels of home builder receiverships. I've just mentioned that. And the price gap between home and apartment prices is expected to close further in the next 24 months. There's a huge gap now, okay? There's a huge gap now. This has been created post-COVID. The gap has been created where the house prices and apartment prices, I have this debate with people all the time. There's people who've been in this country for only 5 years, and they say, well, apartment prices never go up. I said, how long you been here? 5 years. Okay, well, in the last 5 years, maybe compared to houses, not a stellar performer. However, that gap cannot be sustained. That gap will not be sustained, and that gap will actually narrow, okay? And you're starting to see that news come out now. that 2/3 of all suburbs in Australia, apartment prices actually went up more than house prices. You will see more of that in the news because that is where money will be spent. People will not be able to afford houses. All you have to do is go to countries like Hong Kong and Singapore and Delhi and Mumbai and see what people pay for apartments there. Okay? And you'll know that Sydney is not that expensive after you look at the prices in those countries. Okay. Whenever you're buying an investment property, you've got to tick some boxes. Okay? These are boxes that we as a company, as Nivas Real Estate, we tick. We check location. Location is always going to be number one. It's very important. Population growth. Without population growth, you absolutely will not ever have price growth. So always look at where population is growing. Infrastructure projects. You've got to have infrastructure projects. You've got to have transport. You've got to have hospitals. You've got to have schools. All those things are important. Economic drivers. Okay? Very important. New job creation. I won't dwell on it. Capital growth prospects. We'll make an assessment on that very, very carefully before we pick any project. Market cycle, rental demand and yield, local amenities, public transport. Now, I will close my part of the talk and hand over to my colleague Christian to talk about a specific project today that for us ticks all of these boxes, okay? And we'll go through why. One of the ethics that we hold onto in Nivas is that if we are not prepared to buy in a project, we are not going to sell that project. So it needs to tick the boxes for us before we are going to push any project, okay? So if we think the price is now too high on a project, we're not going to touch it. And I think our record speaks for itself. We have never sold an off-the-plan property. I'll say this, we have never sold an off-the-plan property that hasn't had capital growth by the time it settles. Never, okay? And not many companies can actually say that. And why? Because we are very, very, very selective. We have over 30 projects in Sydney, and we will only pick one or two that we feel is the right time to push. Okay, I'll leave you with that, and let Christian take over.
Many thanks, Sachin. Good evening, ladies and gentlemen. My name's Chris. I hope you're all well. Look, I just wanted to go through this amazing project that we have in Rouse Hill. This is a combination of apartments and terrace homes, so it's a little bit of both. Now, a little bit of background, the developer's name is Denville, so they are well versed in the construction space. They've built everything from, shopping centers to apartments and, everything in between. The builder is Binar. So Binar are actually an ICIRT rated builder. Now, what that means is they've basically been given the green light by the New South Wales government to basically be known as a reputed builder in New South Wales. There's a new rating system which has come in play. And the architect is Rotholoman, who are amongst the best architects in Australia, bar none. So if we move across to the next slide. So the builder, Binar, to just show you the caliber of what they've built. So things like the University of Western Sydney, two other large projects on either side there, the Atrium in Liverpool, and also the Liverpool as well. So they have built some massive projects in the past. We have sold projects which they have constructed in the past, and exceptional. They're absolutely exceptional. So if we move across. Now, this is the landscaper. Now, the landscaper's name, or the company name, is Turf. Turf are not a normal landscaper. These guys have done Barangaroo. They've done Waterloo Metro Quarter. They are absolutely exceptional. And Mike Horn, who leads the team, I mean, he's looked after some of the biggest projects, not just in Australia, but across the world. So an amazing landscaper as well. So if we move across. Now, the location. Basically, we're located on 41 Terry Road, okay? Now, this is a very good spot because directly across the road where the sort of marker is there, you've got the new hospital coming up where the arrow is. A little bit further down from there, you've got the shopping centre and the metro, which is just a bit further down. And look, you've got two metros. You've got Tullawong Metro, which is roughly a kilometre away, and you've got Rouse Hill Metro. So walking to sort of, or getting to either of those, walking would be about, at the moment, about 10 to 15 minutes, but they are going to make accessibility a lot easier. So you will be able to get to Rouse Hill Metro a lot quicker once it's all been done. So that's, I guess, the location is in a fantastic spot. Now, you can probably read this a bit quicker than I can say it, but look, a few things here to note. The forecasted population in Rouse, well, not Rouse Hill, but the northwest area, is to grow by 250,000 people by 2036. This is one of the fastest areas of growth, outside of Ipswich Shire in Brisbane. So it's huge, one of the largest population growth in Australia. You've obviously got the new, well, you might not know, but the Rouse Hill Town Centre is upgrading as well. It's a $300 million upgrade taking place. Obviously, you've got Norwest Business Park, just a few stops down the metro. So, look, you've got some really, really good infrastructure projects coming up, which is fantastic. And I'll take you a bit through the project now. So, as you can see, guys, this project also, just to note, is only 6 months away from completion. Okay, so they're well underway. They are on track to finish by about April, May. And honestly, we have walked through the construction site, and this is what it is shaping up to be like. You're going to have a very Babylonian feel, a row of water going through the middle. You've got lovely gardens and landscaping. Like, the landscaping in this place is literally second to none. I've never seen anything like this take place, especially in the Hills District or Northwest. Now, the type of homes you can get, guys, if you look at the top here, you've got sky terraces and residences, right? So they are 3 stories, okay, with your own private rooftop, and I'll get into that in a bit more detail. In the middle, you've got your regular residences, which are basically your apartments. Then underneath that, you've got your court terraces, which are your double-story, I guess, terrace-style units, you could say. So they are well-sized, and I'll go through the finishes in a moment, but honestly, there's nothing like this in Rouse Hill in terms of finishes and I guess this type of design. So this is just one image of what a court terrace looks like. So one of those double-story downstairs ones. You've got a beautiful downstairs area with, lots of space and things like that. So that's a lovely lovely look there, especially with the landscaping. Looks amazing. This is your rooftop terrace, guys, for your 3-story terrace homes, the ones on the roof, the top floor. You get your own private rooftop. You're not going to get the chairs and tables, but you're going to get the landscaping, and everything else is going to look pretty much the same. So it's going to look out of this world. I mean, something that you'd be comparing in, Vaucluse or Rose Bay, or, I mean, the finishes and quality of this place are just next level, honestly. So this is one example of one of the 3-story terrace homes with a rooftop. Okay, so basically you've got your 2 bedrooms here. 2 bedrooms, obviously second bedroom with ensuite, and you've got a little terrace there as well on the corner with access from both the bedrooms. Then if you come to the upper floor, you've got your living area here. Nice island bench top, nice good space there as well with a little study in the corner as well. And as you come up to the roof, you've got your own rooftop terrace, just as the image which we just saw. So something like this, guys, the pricing which I'm showing you there is after a 5% discount that Nivas has negotiated with the developer. Okay, so this is an off-market project. You're not going to find it on REA or Domain or anywhere. This is something that Nivas have got, which we are sort of helping them to, I guess, sell the remaining apartments and terraces before completion. And approximately, look, we've got approximately 40 to 50 left at the moment, but they are selling very quickly because we have just built a display, okay, which you are going to receive in your WhatsApp in about 2 seconds. Anybody who's registered will receive that. So the display home speaks for itself. If we move to the next slide, that's right. So just before I get into this floor plan, you've been sent a WhatsApp with the display. Now, the display finishes, guys, you've got things like marble bench tops, actual marble, 2.7 ceiling. You've got high quality carpets. You've got marble benches in the bathrooms. It is, honestly, the finishes are something like I have not seen in the Hills, as I mentioned. And back to, I guess, the floor plans. This particular one is a double-story downstairs court terrace, priced at $818,900 after the discount. You can have a look at the floor plan there. Feel free to pinch and zoom in. 87 internal, 29 external, and at a price of $818,900 for something double story like this, you just go to places like even Tallawong Village, something like this is pushing the 900 mark almost and beyond, right? Something of this size, this caliber. So they are very well priced, which is amazing. And this is another standard 2-bedroom, just I guess a unit, but a large unit. This is 85 square meters internal and 9 square meters external. Okay, so something like this is for 809,500. Again, something like this at Tallawong, you'd be paying around that 850 mark as well. So it's a very, very well priced and the best finished project in Rouse Hill, bar none. Anybody who's seen it, and that video I've just sent you is a testament to that. And as we pop across to the next screen, now this guy's your 3-bedroom for 973,750. If you haven't seen what the market is doing, I'll take you on a little trip down the metro. Okay, so if you head down towards Tallawong, right, something of this size, you'd be paying around 1.1 million and beyond. Okay, this is at Tallawong, something 90, 95 internal, 13 external. If you're going to a bit further down, you go a few stops down to Showground. So you go to Daycorp Showground, you're paying for a 3-bedroom similar, well, equivalent size, about 1.6 to 1.7 million is your starting price. Okay. So what I'm trying to reiterate is to get something under $1 million of this size and caliber is quite rare. It is very rare. So just keep that in mind. And again, good layouts, square bedrooms, nice, very well laid out apartments. So if we pop across to the next slide, as you can see, guys, all the images I showed you, the rooftops and all that, they're all taking place beautifully. You can see that construction is well underway. This was from about August, so they've progressed even further now. So it is going to come up beautifully. And as I said, check out that video and you'll see what I mean. It is bloody amazing. So if we pop across to the next one. Yeah, okay. So I guess that was it from my part, guys. I've sent you the video. Please go back to anybody who has invited you, or just feel free to reply back to that video that I've sent. And I'll obviously, we can have a chat about the project and anything else. But look, guys, an opportunity to get in to the market in Rouse Hill at these prices, at this caliber of finishes is unheard of. And as Sachin mentioned, the apartment market is due for that uplift. So look, timing is amazing. And we have access to the display. It's unfortunately tomorrow between 1 to 3 p.m. we have access to the display home. After that, they're going to be closed down for Christmas and things like that, because it is still a construction site. But with that being said, if you got time tomorrow and you want to come check it out, please just send me a WhatsApp. I can take you through. Raj can take you through. One of us can walk you through. And we'd love to show you the project. So otherwise, yeah, we're happy to give you as much info as we can to paint a picture of how amazing this will be. So guys, that's it from me. Thank you very much for your time. I do appreciate it. And please, I'll leave it over to Sachin.
Yep. No, thanks. Thanks, Krish. Happy to take questions, but before I do that, I think I'll reiterate the fact that the reason why we have picked this project, we have been selling in this project for a while. We've been selling at Tallawong. We've been selling at the one that Christian mentioned at Showground Daycorp project. We've been selling in the area quite a few different projects, but we step out of a project when we think the price is not right. And right now, we think the price is right for this project. Okay, this is a good buying opportunity. Yes, the completion is not that far off. And the key reason for it is, one, its location, but two, it is the quality and the type of project it is. This project is going to actually stand out in the area because of, one, its quality. It's not a high rise. As you saw, it's not a high rise. The developer actually bought the land nearly 25 years ago. So the land was paid off ages ago. So yes, the prices have gone up, and yes, the prices will go up even further. But this project is well priced compared to what you've got there. 850 odd price for a 3-level 2-bedroom apartment of that sort of nature, with high quality gardens and finishes internally. If you Google in Rouse Hill, you will be getting, for 850,000, you'll just get a single level apartment for that much. Certainly in Tallawong, that is the price. So this is why we're picking this project. And right now, we think that it presents good buying opportunity for those reasons. Happy to take questions. Thank you. I hope you found the session insightful. You can ask me questions on projects or any question you might have.
Perfect. Thanks, Sachin. Okay, now I've got a couple of questions. What is the school catchment? Raj, I believe it is Ironbark. Is that correct?
It's Rouse Hill Public School.
Or Rouse Hill
And
Public.
actually,
Okay.
yeah, Rouse Hill Public School is like 4.1 rating. Ironbark is like 3.2. So it's a better school, Rouse Hill.
Okay. Good man. Thank you for
Yep.
that.
Yep.
Price guide, UJ, we've gone through that. And thank you for these questions. How many have we sold so far? So there's 357 in total. And we're down to about just under 50, if I'm not wrong. So, yeah. So construction is well underway and 6 months from completion. So pre-sales and all that's been done, which is good. Now, as a first home buyer, can we get some grants? Look, you can get a stamp duty exemption to some extent, depending on the price of the project. Of the actual dwelling. But first home buyer grant, you wouldn't. But stamp duty as a first home buyer, yes, you would get some benefit there, up to about. I think the sliding scale goes up to 900. So
800. So 800 is up to 800. If you purchase something up to 800, your
stamp duty. Then up to 9, I think, is your
Up to $1 million, it scales up.
Yes, sorry, up to $1 million.
It scales up from above 800. So
yes.
Yeah.
If you buy something for 850, you're only paying on a small amount. Instead of maybe paying 35,000, you might only be paying like 6,000 or 7,000. We can do the sums for you, but there are concessions on stamp duty certainly at that price level.
Yep, perfect. All right. Sorry, guys, my screen's just gone a bit. Okay, here we go. Now, Vineet, thank you, and thank you for those questions, UJ. I appreciate it. Vineet, is it strata managed? Yes, it is. It will be strata managed. 2 bedrooms, you'd be looking at around, anywhere from about 850 to about 1,000 a quarter in strata. Why do you think in a suburb like, UJ, why do you think in a suburb like Rouse Hill, this is still under $1 million? Okay, that's a good question. I'll quickly give my perspective. I guess the good thing about this project and why the pricing is so aggressive for what it is because I guess the land was purchased some time back from the developer's point of view. So there is some scope there to keep pricing aggressive. How long these prices will stay under $1 million? I don't think they will stay under $1 million for too much longer, especially as we start to progress more and more, I guess, towards the end of the project. And the market in general, as Sachin mentioned, construction prices have gone up, any new project. So I'll give you an example. To build a brand new project, if you buy a block of land today in Castle Hill, to make it work for a developer, a 2-bedroom will be sitting around close to the 1.1 million mark. So that's just in terms of a basic 2-bedroom. So construction costs have gone up. So that obviously plays a part. So yeah, I don't think it will be too much longer until prices go over $1 million, for sure. And next, can display be arranged over the weekend? So UJ, what we can do is we can do a inspection tomorrow between 1 and 3. So that's the only thing. We've only got access then, and then it'll open up again in about 4 weeks' time. They're just the Christmas closed down, and it's a construction site, so we can't go in and out without the tradies there. So tomorrow we can. Otherwise, we can sit down with you. We can go through it in detail. I'm going to be there tomorrow and take a very detailed, slower video than what I've already sent out to everybody, so you can have a good 5-6 minute proper look. Yeah, so we'll try and arrange something. How much? Sorry.
Yeah, listen, UJ. The reason why we picked this project is because we expect significant capital gain. Now, unlike Domain and Core Logic, who are predicting, still, Core Logic is basically saying that next year prices are going to be down, despite interest rates, okay? Because I think there's going to be a major affordability issue. People are running out of cash and all those type of things. My prediction, very simply, is if we're going to get more than 2 interest rate reductions next year, then I would expect that the prices are going to be up at least 10%. At least 10% next year, okay? And I think people forget what impact reduction in interest rates going to do on the backdrop on the backdrop of a supply and demand issue. Last time we had the supply and demand issue was not this extreme. It is quite extreme at the moment. What you've seen in this last quarter, and in my personal view, what's happened with the reductions in prices, a lot of supply of homes came on the market in this last quarter. Okay, there's a lot of people who are downsizing, moving interstate and so on. So agents tell them generally that the best time to sell is in this last quarter of the year, August to December time. And so more and more properties came onto the market right across Australia in this period. And that had some price pressure. And of course, prices will correct in this type of environment. You can't expect prices to keep going up. So my thing is that you are going to see, if you're talking about 2 years, I mean, I would not be surprised in this area that we are talking about that you're not going to find any 2-bedroom apartments below $1 million. Maybe make that 3 years, but 2 to 3 years, you're not going to find any brand new apartments for under $1 million. So listen, prices are just going to, in this environment where you've got shortage and you've got population which is going to keep coming, you are going to see price growth. Okay. And people cannot afford homes with drop in interest rates. House prices are going to go up even more. So that gap will need to close, and people will only be able to afford apartments. So that's what's fueling the apartment market at the moment, and I think that trend is going to continue.
Brilliant. Thank you for that. Sorry, guys.
Yeah, another one.
Okay, another question from you, Jay. General questions. Go for it. This is yours, Sachin.
Yeah, no, listen, good questions. Thank you. Listen, what we are finding, and we got referral partners on this call as well, who refer business to us and who are in their own right agents. What we are finding is that we're getting a lot more professionals actually migrating. So in the northwest of Sydney, particularly, we are finding there is the new migrants are coming here with money. They're saving money quickly. They have got professional jobs. They've got 6-figure sums, husband and wife sometimes, and one could be an IT, one could be an engineer, etc. We see that all the time, and they're able to actually purchase a property within, sometimes immediately, sometimes within 1, 2, or 3 years. So yes, not everybody is in that boat, and not everybody can afford. So there'll still be people who are coming in renting before they buy. Yes, salary hikes are not there, but the affordability obviously becomes better as interest rates come down, and that is, whether it is February or May, it is going to come down. And when it does come down, the whole sentiment in the market changes really quickly, right? When we saw the GDP number a couple of days ago, the thing in people's mind was this GDP looks sick. You take out the capital spending from the governments, and we are in a recession. Okay, for some people, it actually already feels like a recession. So the sentiment can change really quickly, and when it changes, you don't want to be in that space. You don't want to be sitting in June next year and saying, "Damn, I should have bought in December last year," because the sentiment changes, prices move quickly. Okay. Hope I've answered your question, Ujay, but thanks for sending more questions. Reinvesting in the bonds or buying in Rouse Hill, what do you think? Listen, rent investing is a lifestyle thing. It's personal choice. Yes, you should buy where you can afford, and you should rent where you like. So we get people who rent in a certain suburb and rent investing is quite, getting a lot of momentum actually, because people want to live closer to the city or close to the kids' school. So they might be renting there, but they can't afford the house there. So they actually buy somewhere where they can afford. But getting into the property market is important. Building a portfolio, if you're in the investment market, is also important. So it is based on what your individual circumstances are like. Hopefully that's answered your question, UJ.
Perfect. No, brilliant, guys. Any other questions? And as we always say, no such thing as a silly one. Go for it. Anything you want. No, think we're good. Well, guys, I would like to thank you for attending this session. We really do appreciate it. I'm going to send you a WhatsApp message, which you've probably already received, just with, I guess, contact details for myself.
Another question. Okay, sorry, Krish, to interrupt. Any
Sure.
house and land package options from Nivas? Absolutely, absolutely. So we should mention this, that we don't just do apartments. We only do apartments where it makes sense. Okay, and we for example stopped selling Talawong Village, where we sold more than 45 apartments. We stopped selling Talawong Village because the prices went up. But house and land packages, we specialize in house and land packages in Southeast Queensland, in Sydney, in Adelaide, in Perth. Definitely not in Victoria. We have steered away from Victoria completely because we don't like the economic state there. We don't like the taxes that they have. And the property market in Victoria at the moment is pretty much dead.
Yeah.
And I talk to developers there, and they are crying, basically.
Yeah.
And there is nothing moving there. Nothing is moving in Victoria at all. So we have consciously actually stayed completely away from Victoria. We are focused on Adelaide, Perth, and Southeast Queensland, where we've been telling our buyers for the last 2 years, this is the place to buy. And we are very glad that we've told them that, because everybody that bought there, you've seen those figures of price rises in the last 2 years. Stellar performers have been those 3 states, and particularly in the house and land space. But now Brisbane is really, the apartment prices in Brisbane have outstripped the growth in the house prices now. So,
Correct.
yeah.
So, oh, you got another question there, UJ. Hang on, give me one sec. Adelaide or Sydney? Look, personal preference for me. I can't leave Sydney. I love Sydney, but it's Adelaide still a beautiful city. It's still a lovely place. It's more affordable. It's quieter. It's
Definitely, definitely more affordable.
Yeah.
I think, and we were selling house and land there 2 years ago. Chris will tell you that we're around the 500,000 mark. They're now
490, yeah, 490, 480, and now they're all sort of got a 7 in front of it. Most of them. Yeah.
And Perth done the same. So Southeast Queensland's done the same. So listen, you take your pick what city you like, but it's they're all nice cities actually. Brisbane, Adelaide, and Perth are all very nice cities. But I'm very biased and say Sydney is still the best city.
Yeah, but from an investment standpoint, there's still a very chronic supply-demand shortage. Well, I guess supply shortage and chronic demand in all 3 of those cities. So they've all got a good story. Just comes down to preference, affordability, and we can work through that offline for sure.
Yeah, but I mean, I think if you were to, if I had a choice where I would buy a house and land package out of those 3 cities, then I would definitely have a bias on Southeast Queensland.
Same, 100%.
And more than happy to go through the pros and cons offline. We always have one-on-ones with staff, with our clients. So I'm happy to have a one-on-one with you and talk you through it.
Yeah, why don't we do that, UJ? We can we'll book a one-on-one with you. We can get Raj, I believe, would have sent, I'm not too sure. But yeah, let's organize, and you can sit there and you can pick our brain, and we can go through, some good options with you as well. Definitely, 100%.
Yeah. Our phone number is on our website as well. But whoever's invited you today, please contact them and they will be in touch with us. Or you can put your number there, Krish.
Yep. Done. Just send that to you, UJ.
Send it to everybody.
Actually, yeah, good point. There you go. Yeah, guys. So please contact us. We can discuss Babylon and discuss anything that you like, basically, with regard to property. And yeah, we'd love to assist you in any way. That's what we do.
Hopefully you all found this insightful. That's the whole purpose of it. As I said, there is a lot of noise in the market, a lot of uncertainty at the moment in what's going to happen. The good thing is that we are going to see interest rate fall soon. Don't rush and lock your rates. Please take that advice if you are in that predicament. This is going to be a very different market once rates start to fall on the backdrop of the supply and demand disparity.
Perfect.
Thanks, everyone. We look forward to helping you further with your property needs.
Thank you, guys. And if we don't speak, have a very blessed Christmas and New Year. And we will, hopefully speak sooner in the new year.
Yeah.
Thank you.
Thank you, guys. Happy holidays.
Cheers. Happy holidays, everyone.
Thanks, guys. Cheers.
Yes,
Cheers.
guys. Happy holidays, and we'll catch up when I get back to Sydney. I'm away from Sydney at the moment. I'll be there end of next week, and before the Chrissy or after the New Year, we'll catch up and go get on a more discussion with you guys and Daljit. We'll just sit down together.
Love to.
Sounds good?
Please.
Fantastic.
100%.
No worries, we'll
Love
do
to.
that. Cheers, mate.
Thank you,
Have a
man.
good night.
Appreciate it.
Thanks.
Bye.
Take care.
See you later.
No worries,
Bye.
bye.
Take care. Bye-bye.